In today's video, I'm going to share with you 3 stocks that I'm using to fund my 15-year-old daughter's college education. I will talk about 3 things. I will talk about how much they cost me and how much they are worth today, what are my plans for managing risk, and why being a long-term investor pays off. I am Tanya Taylor, founder and CEO of Grow Your Wealth TV. Having a mission to teach at least 1 million people about growing their wealth, my channel covers personal finance topics such as budgeting, repairing your credit, managing bad debt, and investing so that you can retire worry free. And of course, as a CPA, I love to talk about taxes. Please subscribe to my channel and like my video. It helps with the algorithm so others like you can see my video as well. And don't forget to share it and comment. One of my favorite quotes from Warren Buffett is the following: if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. I have been investing in the stock market since the late 90s. I got my start when I co founded and ran an investment club. I had zero idea about investing. When I started investing, I decided that all my investment in the stock market would go to my children. It did not matter at the time that I had absolutely no plan of having children, which is kind of ironic, but all my funds were earmarked for these children. Prior to starting the investment club, I knew no one personally who invested in the stock market. My first attempt at investing in the stock market outside of the investment club was a complete failure. We were at the height of the dot-com era. My investment club was focused on analysis and buying high quality company, and I wanted to get rich fast. So I did not take that safe route. Instead, I was buying a lot of dot-com companies. I got greedy and I failed miserably. I lost thousands of dollars. The quote by Warren Buffett rang true: you can't produce a baby in 1 month by getting 9 women pregnant. That is so true. After my devastating losses, when I was too embarrassed to even talk about because I was running an investment club grounded in solid research and analysis, I decided that I'm never ever going to lose money in the stock market again. Of course, that's a myth because you can always lose money, but it was going to be very measured and very much doing my due diligence. So if I were to ever lose money, it was just because the market's going down. So I buckled down and I started investing the right way. The first stock that I purchased was Apple, and I bought it for $20 a share in 2002, 2003. And I purchased Apple for several reasons. The biggest reason was because they were coming out with the new electronic music. Looking at where everything was going, it seems to me that they were onto something. I was fresh off losing thousands of dollars, so I only purchased 20 shares. And I think I probably spent a little over $300. At this point, I honestly cannot remember how much I spent, but it was no more than $400 maximum. When the stock began running up, I considered selling, but the more I learned about what Apple was doing, the more I realized that the growth potential was solid well into the future. So, what kind of returns did I get from my Apple stock, which I still hold today? After 3 stock splits, I now own 812 shares of Apple stocks. I ended up selling 100 shares during the stock market crash in March because there was tremendous bargains that I wanted to take advantage of and felt that I could duplicate some of my successes for my younger daughter's college fund as well. So what did I do when I sold Apple? I bought shares of Tesla, Google, Zoom, and a few other companies that had kind of bottomed out. I'm feeling really pretty good about the sale of that 100 shares of Apple, even though Apple had a big run up after the crash. Quite a number of companies I purchased during that time more than doubled, with Tesla returning well over 200% and Zoom over 300%. So not too bad. Now let's talk about the second stock that I have in the portfolio, and that is what I call my gift stock. I work for Moody's Investor Services, and they offered a stock purchase plan. The moment I was eligible to take part, I set up my account and did not think twice about that money coming out of my checking account straight to purchasing those stocks. The beauty about Moody's is that it was easy to research. It was a company that I worked for. I felt that management of the company was excellent. It was well run and it was growing. By the time I left Moody's, I had about 375 shares. I also sold 100 of those shares during the crash to purchase the other companies that I mentioned. I would say to you that if you are working for a company that offers a stock purchase plan and it's a solid company, you absolutely want to take advantage of that. You are already getting that stock at a discount because most of the times the companies offer those stocks to you at a discounted price from what it's trading for in the market. Comment below and let me know if you're taking advantage of your employer stock purchase plan. And if you are not, if you plan to take advantage of it, I implore you to start doing so. Now let's talk about the third stock, and that's Amazon. I purchased Amazon in 2009 for $16 per share. For those of us with long term memories, that was the depth of the financial crisis. I purchased Amazon because they were becoming the best thing for someone like me who never likes going shopping in the mall or to the store, to be quite honest. Amazon had clearly shed its days of being more than a bookstore. I found myself shopping more and more on Amazon, and I knew that from the Kindle that there would become other innovative idea. Quite frankly, not in my wildest imagination did I imagine Amazon would have evolved to what it is today. Regrettably, I did not purchase another share of Amazon until a couple months ago when it dipped below $2,800. I purchased it again because I really believe that there is still a lot of potential for the company's stock to grow. So, what are these stocks worth today? Okay, let's talk numbers. My Amazon stock is worth $51,487. My Moody's stock is worth $88,786. And my Apple stock is worth $99,356. So in total, I have sacked away for my daughter's college in unrealized gain $239,629. Now, here's the thing. How much did these stock cost me? So in total, I paid for Apple $2,921. And that's because during the 2014 split, I bought a couple more shares, but the bulk was somewhere between $300 and $400. For my Moody's stock, I paid in total $13,441. And for my Amazon stock, I paid $299.48. So the total cost of all of those stocks was $16,661. So my total profit on those three companies is $222,968. So, what is the key takeaway from this? So many people fear the stock market, and it really is not to be feared. You can make great wealth in the stock market. Of course, there are risks, but overall, weighing the risk and the rewards are much greater, especially if you do your research and you diversify. What investing in the stock market has allowed me to do is that it has allowed me to travel the world with my children because I do not have to put away as much for college. I have figured out how to make money work for me, and that really is a benefit of investing. I do want to say that even though I'm sacking this money away for college for my children, the first priority for them in going off to college is that they're going to exhaust all their scholarship options. And that is not an option, that's actually a requirement. And only after they've done that will they be able to tap into this money for college. One of the things that was very important to me when it comes to my children is that if I am expecting them to go to school and put in the hard work and they choose a college that they want to go to, I should not be saying to them, no, you can't go to this college because we're not able to afford it. So that was a big priority for me because if they're living up to their part of the bargain, then I felt like I needed to live up to my part as well. And so I've had to find ways to make sure that I have enough put away so that I'm not tapping into my retirement to pay for their college. And investing in the stock market is what I have been able to do in order to do that for them. Let's talk about how I am managing my risk because my daughter is 3 years away from going off to college. And the question is, will I keep the money in these stocks? I would love to hear from you if your child was 3 years away from college and you have all these gains in the stock market, whether or not you would tap out at this point in time or if you would keep holding on to these stocks. So let me tell you what I plan to do. The answer is that I do plan to keep holding on to these stocks. I actually have no plan to sell them anytime soon. I do have other strategies that I have put in place that will allow me to pay for them to go to college until the stocks rebound if something were to happen and the market goes crazy. So, a couple of the strategies that I have in place is one, I purchased life insurance for my children since they were very young, and this is to use more for generational wealth. And I will do a video on that and how I'm using insurance to make sure that they can leave wealth for their children and their grandchildren. The insurance policy has cash values, and we also have other investment account for them for college besides the stock. So if the stock market were to go bunkers, these investments are a little bit more diversified. So I figure that I can use those money towards college until the stock market recovers. And then, as a way of building wealth, similar to how I have purchased life insurance for my children to use as a tool to build wealth, I have also purchased life insurance for myself to build generational wealth that will pass on to my children's children. And so, those insurance also have cash value. So, that's another way to tap into cash to pay for college if we cannot access the money in the stock market. You've probably heard the term infinite banking, where people use life insurance to pay for all sorts of different things. I mean, coming from a life insurance background, I just call it policy loans. So I would be able to take out insurance policy loans from on my insurance policies if I need to do that to pay for my children's college. And last but not least, using other people's money. I have zero issues using someone else's money to pay for my children to go to college. So if I need to take out a loan during the 4 year while they're in college in order to wait for the stock market to recover, I am absolutely okay with that. Over the long run, the stock market always recovers. And for those three particular companies that I mentioned, they are solid companies. So I believe that even if the stock market were to go down, that they would recover. And therefore, I am not super concerned about losing my money in those stocks. So I'm going to continue to channel Warren Buffett, and I will go with this quote: buy a stock the way you would buy a house. Understand and like it such that you would be content to own it in the absence of any market. I really feel very strongly that these three stocks kind of meet this criteria that Warren Buffett talks about. And that's why I am not concerned about holding them until my daughter go off to college or holding them for much a longer period of time, hopefully for them to pass on to their children because they'll get a lot of good scholarships. The reason behind doing this video is to really say to you that you can use the stock market as a tool in order to build your wealth. I want to hear from you about how you feel about investing in the market. What are your fears? What are you comfortable with? What would make you jump into the market and say, yes, I want to start investing? A couple years ago, there was an article, and it basically said that the greatest wealth transfer was occurring during the financial crisis. But we don't even have to look a couple years back. We can see what happened in March. I can easily rattle off at least five stocks that I purchased after the crisis that have returned way more than 100%. I can rattle off at least five stocks that I purchased over the past 3 months that have returned 100%. So, yes, there are risks, but there are so many rewards, and there is a lot of different ways to manage risk. I teach people about investing in the stock market. I teach people about growing their wealth. I teach people about protecting their wealth. So if you are ever interested in learning more, you can always reach out to me. All of my contact information is in the links below. I get super, super passionate about investing and even more passionate about building wealth because it really gives you access and flexibility. And for a young 16-year-old girl who came to this country all alone with $100 in her pocket, it's very personal to me. Wanted to share this and just let you know that there is a lot of opportunity out there to use the stock market as a tool to grow your wealth so that you have different avenues to be able to use your money to do other things like going on a vacation or whatever it is that you choose to do, that you do it and you enjoy it and you use the stock market to help to build wealth. Hop on over to my Facebook group and join me in the Facebook community as well. I have lots of information that I share within the community, and I will continue to make really great videos so that you can continue to learn and grow and build your wealth so that you can retire worry free.